the satisfaction of being an independent broker and knowing that I know our clients personally, and probably 75% of the clients are searchers who are entrepreneurs who've bought their own businesses. It's just far more satisfying for me to help those folks succeed.
Anybody that follows this market at all probably knows you've had some extreme growth within your agency. Like some of the highest numbers that I've heard in a long time, you doubled the size of the book that you took with you from the previous company.
And invariably, if I get 10 people in a room who bought a business, there's somebody who's bought a business who didn't do insurance diligence, and they'll have a story about how their ex-mod went up after they bought it, or they got to closing and then they found out they needed new policies. And that's what we help them avoid.
You've got a good niche. You could run that niche everywhere. And then once you become embedded in that niche, well, now you've got all the other players. I'm assuming this is the case. If you focus on search funds, well, you probably know all the supporting cast. You can make introductions to them. You can connect dots other people can't.
If you think about what is the role of an independent broker for their client, it's not to be an expert on everything. It's to know who the experts are, to bring them in and sort of curate that panel of professionals.
How do you approach carrier selection and who you write with and maximizing contingencies and things like that?
That's one of the most challenging aspects of what we do.
All right, Andy, I'm excited to have you on the show. And leading up to this, I had heard a lot of really good things about you. Where I want to start this, though, is tell me about Brian Casey.
Brian is probably the person who had the biggest impact on my career. And so I think it's only appropriate to sort of honor him every chance I get. But Brian was the head of Aon's global M&A practice from roughly 2005 to 2014 when he retired. And I think he was really the most significant mentor in my early career, because at that point I'd started at Aon in the service center, which is sort of tantamount to working in the mailroom. I lucked out. It really was. And that's a whole other, I can go on a tangent about how lucky I am because of 9/11 that I even wound up there, to be honest.
Absolutely.
But I was fortunate enough to wind up working for Brian's long-term partner, and she was my boss as a junior broker. And then I got to meet Brian over beers in New York City where we all worked. And so Brian ran the M&A practice for darn near 10 years. He wrote my grad school. In 2008, I had this great idea that I would go to business school and I would leave the insurance industry. So I left in 2008. I left AMAG, the Aon Mergers and Acquisitions Group, in 2008. And Brian, somewhere, it's funny, I still have the reference letter he wrote for Washington University in St. Louis, which I ultimately didn't apply to because I thought it would be too expensive. But that letter was probably the nicest things anybody's ever said about me. So I keep it in the drawer in case I'm feeling bad about myself. I can pull that guy out and say, oh, Brian said Andy did all this stuff. But Brian was just such a huge proponent early in my career that I don't think I would have had. And I've been reflecting on this a lot lately for a bunch of different reasons. But I think the most important thing was that he really believed in me. And as a young person, having a mentor who believes in you is the difference between, recognizing your potential and actually acting upon it. And so the thing about Brian is anybody who ever met the guy, he was just one of the funniest people you could ever meet in your life. And had a levity. He was intensely serious about work. Like we really were. Like he was, running around the office yelling, and you'd think he was going to explode right there on the spot. But he also had a levity about him. Brian was such a funny guy, and sometimes had a really deadpan sense of humor that I would ask him as a young whippersnapper who really wanted to do. I was ambitious, I guess. And I'd ask questions like, hey, Brian, how could I be doing better? What should I do here to contribute more and be a better team member and develop and all that kind of stuff? And Brian would look at me just totally deadpan and say, hygiene. I'm still working on it. It's been 25 years, but I wanted to tell that story just because he passed away recently. And at some point, my plug for the scholarship fund, which hopefully I think some folks are starting a scholarship fund at his alma mater, the University of Wisconsin, Madison, in the risk management department. And I plan to help contribute to that. So he's a wonderful man.
No, I mean, and he sounds like it. Just from what you've shared on camera, off camera, sounds like he's pretty incredible. And so interesting. So you started your career, as you mentioned, Aon in M&A, and I've seen that's been a throughput of working in various whether that's private equity, search funds, things like that. And that's one of the things I really want to focus on here. Now, one of the things I'm curious about is you could have a really, really good career. Once you build those networks, once you build those relationships within whether it's PE or investment banking or whatever that might be, you could have a heck of a career at one of the big shops doing that. Why start your own?
Over the years, I went from working on large private equity deals to lower middle market private equity deals. And the dynamic with clients is very, very different as you go downstream.
Sure.
And if you're part of a big institution and part of a bulge, a alphabet house broker, most often you're a cog in the wheel. I don't want to say you're disposable, but that's not what it is. For me, the satisfaction of being an independent broker and knowing that I know our clients personally, and probably 75% of the clients are searchers who are entrepreneurs who've bought their own businesses. It's just far more satisfying for me to help those folks succeed. And if the way I look at it is it's really, for better or for worse, commercial insurance for me has been a vocation and a lifestyle and everything else. It's intrinsic to who I am.
Yeah.
And if I'm going to show up and try to do my best every day, I'd rather do it for people that it's not that I don't respect or appreciate or value the other people and all the rest of it, but it's just the intimacy of actually knowing who your clients are and knowing that what you're doing has a direct impact on your life. That's what I chose. And I think the money will eventually come, but I sort of made this, decision to say I'd rather build professional relationships that way than being in part of a big institution. That's a big part of it. The other part of it is just, frankly, the consolidation in the industry. I think you're seeing a lot of people, and I have a handful of friends who fall into this same bucket of people who've, I don't know if you know Lion Specialty. I think of them frequently, but I worked with Mark and Natasha at NFP. They were inspirational, and they were a couple months ahead of us, but launched Lion a little bit before we did, and kind of coming to the conclusion like, hey, we're really good at what we do. We don't necessarily need this large broker structure around us to be able to provide really good service for our clients for a ton of different reasons. And if you want to do that for the next 10 or 20 or 30 years, 30 might be pushing it. But we don't want to sell. We don't want to get bought out. We don't want to work somewhere where we build a practice only to have that acquired by another big broker. And that desire to remain independent was a big motivator for Josh and I.
And is that because you have more control? So it's like you get to build relationships. If you're lower middle market, you're probably oftentimes working with either family owned or meaning like not that necessarily a private equity fund, but those private equity funds, they're buying lower middle market. What's that? A couple million in revenues typically, or?
Yeah, it's stuff I used to joke about. Like, why are we working on this $5 million deal? And in a lot of cases, our clients are entrepreneurs who are buying. They're usually buying a family-owned business that hasn't been sold before.
That's right. You said 75% comes from search funds.
Yeah. And so those are usually our search fund clients. Without turning this into a whole discourse on search, and
I mean, anybody that follows this market at all probably knows a couple of things. One, you've had some extreme growth, right, within your agency. Like some of the highest numbers that I've heard in a long time from. You doubled the size of the book that you took with you from the previous company.
Yep.
And I'm curious, like when I look at this from the outside, I see you've got a good niche. You can run that niche everywhere. And then once you become embedded in that niche, well, now you've got all the other players. I'm assuming this is the case. If you focus on search funds, well, you probably know all the supporting cast. You can make introductions to them. You can connect dots other people can't. And then on top of that, these deals are good deals, but they're just under the radar of whomever it might be. You name the top 100 and probably even top 20, where if you start going after even middle market, if you go over to middle market and above PE, well, then they've got pretty tight relationships with the largest of large. Is that fair?
You don't even need me on the show. I feel like you just put up a mirror and you're like, answer the questions. 'Cause honestly, you nailed it. My partner within the search fund space, my partner Josh had been at it for at least 10 years at this point. And he introduced me to search, and I looked at search like it was PE light, right?
Yeah.
And it's, hey, we have to help people with transactional advisory services through a deal, but it's not the way you approach a $10 million business is very different than a $100 million business or $1 billion business. And so it's funny, there was a learning curve for me of how to scale insurance diligence to fit these types of transactions.
Yeah, absolutely.
And then you have a whole different set of issues that come with small commercial work. You know, when I look at my time at Aon, for example, or even Hauser, in a lot of cases, outside of lower middle market, you're talking about PE firms selling companies to each other.
Yeah.
You know, if it's a $300 million company getting bought by another $300 million company, the insurance diligence really, you know, maybe we can point fingers and say, oh, this D&O policy from Marsh has got 17 points that we would do better with.
Well, that's an interesting point, because that's pretty buttoned up, meaning like they were already working with a very well, like you said, Marsh, right?
Well, here's the thing that I learned from all of that, and which is why and I think every independent broker is probably aware of this, and especially when you look at the roll-ups, right? And just because a brokerage firm has a certain name on the door doesn't mean that you can expect uniform quality from the work they do. And I on one hand, when we look at probably 100 companies a year, plus or minus, I've kept that up for a couple of years now. And if something comes across your desk and it's, you know, a top 10 broker, you're going to assume it's not a complete mess, usually. But you don't know. And I don't want to pick on. I'm not going to pick on particular brokerage firms. But if you just think about it logically, what I found, and I will pick on this example. I was at NFP for a year, and it was a weird year because it was 2020 and it was COVID, and I was brought on to build out the diligence capabilities on the M&A team. And the M&A team at that point was pretty nascent. It was 4 transaction liability brokers that came over from JLT, but they didn't have brokerage and diligence and all that.
For the audience, when you say diligence, are you referring to this is the team that's partnering with the PE, and we're going to be handling we're going to be reviewing the insurance and risk related items for a company that they're going to acquire?
Yes.
Okay.
Yeah.
As part of their greater diligence review process.
Correct. And there's and that's the whole model. It really developed, I think, about 30 years ago. In the mid-90s, you had guys like Mike Marcon, my former boss, Neil Crowder, the guys who started the Aon St. Louis office, the Tim and Tom Donnie are pretty well known.
Yeah.
And to your point about entrenched relationships, what I learned much later was that Aon, Marsh, whoever else had a pension fund, they all wrote checks to the top 10 private equity firms, right?
Yeah.
What it's funny is I found that too is even in the independent broker world, a lot of guys who are principals of independent agencies invest in other small businesses, and whether they do formally or like informally, but that just seems to be how this goes.
Well, or, you know, I should say, and, you know, oftentimes especially if it's a generalist agency, right? They might send all of their mitigation business when a claim hits to a somebody, that contractor that they insure. As opposed to going to one of the other companies.
It's really funny you say that, because those are the types of issues we run into now. The challenges that we have competing today as NewCo Risk exists, that's the kind of thing we run into where our client, who's a searcher, might buy, and I think we have 2 or 3 remediation companies. And this exact example I'm thinking of is, well, they don't want to switch insurance brokers because their current agent sends them a lot of business locally from, you know. And the funny thing, for what it's worth, and I'll get this out there too, it's so rare that I compete with other independent agents that I am almost always of the mindset, great, they should keep their business.
Right.
That's not who I'm competing against.
Yeah,
if you've already sold your agency and you have a, you know, PE sponsorship or you're a publicly traded company, that's who I'm competing against. It's not the folks who still own the independent agencies.
So one of the things I'd like to dive into is you got a good niche, a really strong niche. And clearly, you and your partner both have the experience for this niche. I mean, anybody that's just listening to what we just talked about, that is a very unique skill set where you can bring value that the standard, I won't say standard, that's unfair, that the rest of the independent agents probably don't have at the same level, just by the nature of however they grew their business, whether they're a generalist or their niche. But you still grew really fast. What do you attribute that to?
Thank you. Number one. And I also have a bit to say about that too. Just when I think about our competitive positioning and why I don't mind saying this out loud, I don't think there's really anybody else who could do what we're doing. It would have to be, and I say that it's I'm the star of my own reality show, right? I don't know who else is out there.
Well, but I'll say this: search funding just got big only a couple years ago, and you guys were early into that.
Yeah, thank you, and that's very true. Where I feel like where we lucked out, just is how stuff works, is having the experience working at Aon and then Hauser. For me to work at initially a very large firm and sort of have this institutional training, and then to come downstream. Most of the folks, and I'm still friends with tons of people I worked with over the years, and they're not going to quit their good jobs at Aon or pick a firm, right?
Yeah, sure. Sorry.
To go be independent, you have to be half nuts to do this.
Well, it's my original question. Why do it? Yeah, exactly. That's exactly right.
I wish I had a better answer. I mean, in fairness, I'm not comfortable with the term entrepreneur, but as I reflect on middle age, it is accurate that I've always been kind of an entrepreneur, and I've always started businesses with my friends. Is what it comes. A big part of it is, hey, I like this guy. I like hanging out with him. We work well together. Do you want to go do that thing?
Yeah.
And that is a big motivator. But to answer your question about growth, just more directly, well, someone when I say I don't think anyone else could do this, I think for Josh and I to have had the experience institutionally and then falling downstream into search, super helpful. It's just rare that people choose that career path and have that sort of set of experiences. Two, I think to your point about from a revenue perspective, independent agents can live off of $10,000 to $20,000 revenue clients all day long. Those are great.
No question. Yeah,
right? But you go to Aon or whoever it is, and the producer doesn't get paid if it's less than $25,000 or $50,000 in revenue. And the production goals, at least, and I was on a production plan at Aon in 2013 for 6 months, and I think you have to hit like 3 times your salary every year in new business. Which, depending on what market you're in, I don't know how anyone can do that if they're not focused on private equity, construction, or radio, TV, film production, media production. I don't know how you build that kind of book. It seems darn near impossible to me. Not book, how you build that kind of how do you feed that funnel every year with new business? This is wild. So how did we grow? I never would have thought I would say this out loud, but old school selling insurance. And when I say old school selling insurance, flying around, publicly being visible, shaking hands and meeting people. We do a lot of conference sponsorship, do a lot of happy hour sponsorship. We go to a lot of university conferences.
University. So is that to get the people that spin out? What are the university conferences? Yeah,
that's a totally good question. So in the world of search, you basically have two tracks, traditional search and then self-funded search. Traditional search refers to this model of entrepreneurship where, say I'm an insurance executive and I want to go buy an insurtech company, and I need 5 or 10 people to pledge. They used to be called pledge funds.
Yep.
You basically have this capital commitment from investors to buy a business, to provide the equity capital you need to buy a business. And in the traditional search fund model, typically the searcher, who, if you think about it, the searcher is really doing business development for private pooled capital.
Yeah.
But that searcher is also drawing a salary during that time. That is juxtaposed with self-funded search, which is like It's self-funded searches where Josh and I fell, frankly, because I don't think it would be a secret to the folks we used to work for that before we thought, gosh, we should carve out and buy our book. We thought, well, can we buy an agency? And so I would say we were self-funded searchers for 6 or 12 months before we realized that there's way too much competition. Multiples were way too high for us to make it make sense. And then where we wanted to take the agency, or broker as I prefer, but where we wanted to take it didn't make sense to try to do like a transformation of an existing agency.
Yeah.
So the self-funded guys are literally like, I don't know, 30 to 50 years old. There's a profile, right?
Yep.
It's 30 to 50, doesn't want to work for somebody else anymore, typically uses an SBA loan. And those are, there's both. And so why would we go to a university conference? Most of the top 20 business schools and below that too, actually, I don't want to just say this is an Ivy League thing. But a lot of business schools now have entrepreneurship through acquisition tracks within the business school, or they'll have an entrepreneurship through acquisition is also called ETA. So they might have an ETA club, and most of those ETA clubs will sponsor a conference. And the conferences they're great. They're like 1 or 2 days. Most of the academic conferences are 1 day, and they're generally open to non-students as well. In fact, I should feel like I should plug the BYU conference coming up in March, because I think we're sponsoring that next. And, and I'm hoping that they give me a panel slot. Wink, wink. But they're the university conferences are great because they almost take you through it within a day long event. How do you source a business? How do you finance a business? What does it mean to conduct due diligence across insurance, finance, legal? So that's why we go to the university conferences, and it's. You kind of said it earlier too, is Josh put in years before I did, and then me personally since 21, just putting a lot of time on the road, meeting people and networking within the space. And a lot of folks within search, this is what's kind of interesting. I guess blue ocean-ish, I guess. The idea of insurance diligence, well, it's commonplace in private equity. And so for the folks who come out of the private equity world, they go, oh, sure, we need insurance diligence, because why wouldn't we have insurance diligence? We always had it. Anybody else goes, what would I need insurance diligence for? That seems crazy. Why don't I also have, diligence on the toilet paper vendor and diligence, you know what I mean? Like it's
yeah.
So that's when we get to talk about it, suddenly it's very eye-opening. And people, and invariably, if I get 10 people in a room who bought a business, there's somebody who has bought a business who didn't do insurance diligence, and they'll have a story about how their X mod went up after they bought it, or they got to closing and then they found out they didn't think they were going to need new policies, but then they found out they needed new policies, and the seller's policies had that kind of stuff. And that's what we help them avoid is to basically have that certainty around you can buy this business and your expectations around what insurance should cost are reasonable, and we can deliver upon those expectations.
So essentially, you've built messaging that informs them about a problem that they do not know that they have yet, which is the ultimate place to be, and you can back that up with real testimonials.
Mm-hmm. Yeah, and it's funny because I joke that I'm a terrible insurance salesman because I tend to never think the worst is going to happen, right? We're like, let's go start an agency. It'll be fine. I'm like just a total knucklehead when it comes to that kind of thing. And so I do a really mediocre job at best of telling people about, well, this, and I've watched other insurance professionals do the thing that I'm bad at, which is to just scare the bejesus out of their prospects.
Yeah.
So we don't have to do that. But the testimonials, I guess to my point, 10 people in a room, there's usually some testimonial from somebody else about, oh yeah, that happened to me. And then you start to see the same things over and over again. There's some pattern recognition there that happens where we're talking about generally family-owned businesses, and the way family-owned businesses are run, or entrepreneur-led businesses, they tend to be risk takers to begin with. And so their approach to risk and insurance is a la me, right? Like, I don't want to say it's looser, but it's not necessarily up to the best practices of the current underwriting community.
Well, so actually, here's a question. How, the nice thing about being a generalist agency in a local market is carrier selection is pretty straightforward. You've got a pretty good idea on who's competitive. And if somebody stops being competitive, it's not hard to find who is going to be competitive. And the carriers are giving you communication all the time on where they're competitive. When you're a niche agency, especially in this one, right? This is interesting because it's not like this is student housing and you've got carriers that are specific to just student housing. You could be buying anything. You could, like these searchers, they're just looking. I mean, don't get me wrong. There's things like, HVAC and stuff like that. That's probably more common, is my guess, because those are just good businesses to buy. But how do you approach carrier selection and who you write with and maximizing contingencies and things like that?
One, maximizing contingencies is not something we think about.
Okay.
No,
it's great. No, absolutely.
It's to say we really don't, but mostly because we're not that sophisticated. And also in part because I worked at Aon when Spitzer investigated in 2006. I still have a very that commitment to transparency is still really important to me. And it's like, you want to know how much I see other agents do this. They'll take their Sharpie and scratch off the commission, right? Like, I don't do that. We'll tell you exactly how much we make, because in a lot of cases we're losing money. But that's, but to answer your question about carrier selection, that's one of the most challenging aspects of what we do. We've got clients in roughly 40 states. And so we tend to work with national insurers. We've had...
Do you take the edge cases? Do you take the E&S opportunities?
Oh, yeah. I mean, we do. I would say I'm giving away probably 40, 50% of the book is standard markets, national carriers. 30 to 40% is E&S or program business. Programs are becoming increasingly more important for us.
As you say, do you guys think about that? How do you think? I mean, do you think about building your own program for some of these ones that you're seeing all the time?
I've been asked about that, right? And people say, gosh, like, could we do a program for SMB business operators? And I wish I could, but it's just because we all know each other, it's too general, right?
Yeah.
And if I can't find the short answer is no, I don't think we have the shared underwriting characteristics to come up with any kind of meaningful program.
Yeah, gotcha.
I have thought about an agency captive because there's a lot of interest in group captives, but people don't really understand how they work. And just in general, for folks buying businesses, I think, like I said, they're like the risk takers. They generally, nobody likes insurance until they've had a claim paid. That's what I found too.
It's 100% true. Right? Absolutely.
And I don't think I'd be in insurance. My mom burned up the house when I was in college. And if it wasn't for the State Farm adjuster coming in and, writing checks and making sure that we were made whole, I don't think that positive experience of insurance, had it been, but for that positive experience of insurance as a young person, I don't know that I would be in the industry today.
Yeah.
Right? I'd probably be as skeptical as everybody else. But I've thought about that. But where I think programs matter for us, and this I'll give away if anybody's interested in it. I found there's a number of program managers that are, and some of them are now have been acquired by large brokers, right? Like it came up this morning. The cosmetic program that is now owned by Epic, but it used to be Victor Frankel, which was a independent regional broker in New Jersey. And Frankel and Brownyard both have these cosmetic programs that if you're a cosmetics or personal items manufacturer or seller, I think they're tough to beat. If somebody else knows a better market, please let me know. But almost anything that I've done that's personal beauty products, cosmetics, shampoo, it's usually one of those markets, right? They don't really have a sales channel. Like, they don't have salespeople. They've got one guy who's the BD lead. Other than that, they're like, I don't want to say they're orphaned programs, but maybe they do a couple million in revenue.
Yeah.
And so my hypothesis is, we're building based on what we know initially. And to answer your question of how we managed to grow, it's been almost 80-90% through the channel of clients buying businesses, whether it's search or independent sponsor or private equity. And then referrals start happening too, which has been great. But I think the next step for us in proactively growing what I'd like to try to do, and I think we can do, is finding a couple program managers amongst the program managers we already work with, and then making a more concerted effort to market their programs where they're not already. And some program managers go direct, and it drives me crazy. But that's but a lot of them don't. And this is where I think we kind of have an advantage potentially, is small business focused, but a national broker not competing with other local offices.
Yeah.
Right. If anybody who's worked at a national broker, and they don't all work this way, but I mean, I don't know, my experience at Aon, for example, right? Producer in Charlotte logs a prospective client to Salesforce. The producer in DC can't call in that client.
Yeah.
And so this is where I feel like we have an advantage. It's just not a lot of people have a national production focus for small commercial business.
Well, so actually on that, on the national carrier side, admitted side, how do you select the carriers?
It's the 80-20 rule to some extent. We looked at, and we had the advantage of like looking at where our book was a year and a half ago, and saying, all right. And it's funny how this worked out. I don't think it wasn't any strategic, path on our part. But when we looked at the book, it was Travelers, Hartford. Who else is? I can tell you who we don't really write with. We don't really write with Liberty. We don't really write with Chubb. There are I call them super regionals. There's probably a better name for it, but the Cincinnati's selectives. What is it? Weston.
Yeah.
That like that second tier of maybe not household names. Those are the markets that we wish we had better relationships with. But my experience has been that they tend to be geographically focused. And when we've had those conversations with the carrier reps about explaining what do we do and where do we get clients from and where are our clients based, they've said, well, gosh, FCCI is a great one. FCCI, I'd love to have FCCI, but they're like, wait a minute, you guys are domiciled in Texas, but you live in Missouri and California, and you've got employees in California, Texas, Michigan, and Florida. We don't know where to put you. And I've had that conversation 5 or 6 times now where the carriers just don't know what to do with us.
Yeah.
And then I will throw this on extra layer on. What's been interesting about being a member of the Indium network is we've had some flexibility in terms of what underwriting region we're aligned with, where it's been, should like they be within Ohio because that's where a lot of the Indium relationships sit. But that's not giving away the brokering insurance business. 20 years ago, it was like a well-known inside tip within Aon, for example, right?
Yeah.
About knowing which underwriting office to approach. Like the example I always think of is Lexington. We knew at Aon in New York, we knew that the Lexington underwriters in New York only had 5 million of quake capacity, but if you called the home office in Boston, you get 10, right? Stuff like that. And so we've always sort of leveraged that arbitrage, I guess, of, well, like giving away all the secrets at Hauser, right? We're like, well, we've got a guy in Atlanta. We have some Atlanta underwriters. We've got some, Cincinnati underwriters. Where do we think we're going to have the most success with this particular risk that is not connected to where the risk actually sits?
Well, but I would still put that back into kind of what you said earlier, right? Like, I think I'm personally a big believer in niching. We have a marketing agency and we specifically focus on insurance. And that's it. That's all we focus on. And it's for a lot of the same reasons that you had mentioned. Is like you begin to know. Now I've been in insurance my entire career, but you begin to know all the nuances. You can make those connections. On the insurtech side, we can help line up VCs. On the carrier side, we've got deep relationships with agencies where we can get, real information from them that carriers want to know, but your odds are you're probably not going to have that conversation with the carrier. And it's connecting those dots, and you're at the conferences. You are where your client is, as opposed to going to advertising week conference and competing with every single marketing agency that's out there. If it's us versus a bigger New York agency going against trying to get Geico, we're not going to win that. There's no chance. But there is oftentimes that little niche within the very big company that we will be able to outcompete them and in every way across the board. So to this point, to why I'm actually saying this is what you're saying. Yeah, I think if you've got a niche, usually a good niche agency can do very similar to what you just said for their specific niche. And knowing where to go, knowing what markets to go to, who's got capacity, who doesn't, who's going to be more competitive, who should we go with. I've seen that quite a bit, whether that's, people writing ambulances, people writing student housing is another example, and it could cannabis, it could be any of those.
Sure.
So I would agree with you. That's going to be really hard to compete with you in that. But the layout on like how to scale a niche is dead on. It's super interesting to me.
It's what we've found, and you kind of nailed it earlier too, though, about what is the profile of a search deal looks like. The stuff that for self-funded search, where folks are buying businesses with SBA loans, those generally have to be they trade at reasonable multiples, right? So they're not SaaS businesses or tech businesses. They tend to be pretty meat and potatoes of HVAC, plumbing, electric, other business services, which is really, really helpful, right?
Yeah.
You don't have to be super niche to know the intricacies of the plumbing business and pick a geography. It's not that they're all the same, but like, and we have enough clients too, and we've had enough experience that, we can comfortably speak to like, behavioral therapy in Texas. I mean, why do we have 4 or 5 ABA approved therapy clients in Texas?
Yeah.
I don't know, but we do. And so,
well, that's what I was thinking as you were saying this. I was like, I would almost debate what you just said, right? And like you said, if I'm hearing you correctly, was, it's not crazy that an agency in their local market would know the ins and outs of a plumbing business, for example. I would say yes, but there's only so many plumbers in that area where you could see the odds of you seeing a much higher volume could be much higher. Is that fair to say?
I think so. Yeah. I mean, it's the balance between, mile wide, inch deep, and vice versa.
Yeah.
And occasionally, and here's the honest answer to your question, because I don't, they're all honest ansers, by the way.
Everything previous to
up
this,
to that, it was all just
it
made
was
up.
just, I don't know. I was just thinking about it.
Sometimes I hear my self-talk, and I think everybody probably does this, but I go, man, I sound just like my father. And I have like the same mannerisms and the same, honestly, to be frank.
Yeah.
All right, thanks, Ed. But we do, we wholesale a fair amount for specialty stuff. Like all the financial lines. Like I'm a decent D&O broker. I've been at it for 20 years. But I'm not gonna, sit here and you throw a D&O policy at me and a D&O policy at the guy who's only been doing D&O for 20 years. The guy's kind of like, I work with a guy at RT who ran the program at Chubb for the private equity, portfolio. Like I'd rather bring that guy to the table and make less money. And so the other part about this is, your book's whatever, 18 million in premium, but like a lot of that's at 10% and not 20%. And it's just, the mindset, and this is, I would say Mike Marcon, the guy we used to work for, Mike drilled it into me more than anybody. And I'm going to juxtapose that with some other independent brokers I worked at, where they were concerned about maximizing profit share and looking at like, all right, well, can we bring this chunk of business in-house and make more money on it versus leaving it with a wholesaler who does bring a specialty expertise. And I used to be super cynical about wholesalers 15 years ago because I was a softer market, and I'd work within Aon, for example, you'd had market-facing people and client-facing people, right? And they call them brokers and relationship managers, syndicators, and whatever the terminology was. But I'd meet these like lazy brokers who wholesaled their whole book. And I'd go, what are you doing to market this at renewal? Oh, I got it to Sweat. It used to be Sweat and Crawford, right?
Yeah.
And I thought that was lazy, but I've changed my thinking about this to saying, you know what, working with wholesalers is appropriate and better for the client in a lot of cases. If it's like I've done a lot of healthcare, like I know healthcare pretty well. I actually wrote a 15-page book on how to insure a physician practice management, like MSO roll-ups of healthcare services. But I still use a medical professional broker,
right,
to place my balance.
The expert. What I'm hearing you say is, if I feel that I can do as much as the specialty broker that's out there, then I'll do it. But if it's something that needs this advanced knowledge, where somebody can, this is worth bringing in somebody that knows way more about me, because if I'm wrong on something, it's a problem.
Right.
But if they're in, odds are they're going to get it right.
Totally. And if you think about it, if I think about what is my role for the client, and the way I'm personally hardwired is that I want to know how everything works. And it's a huge burden in my life that I'm terrible at things like paying people to do stuff for me, because I'm, the kind of knucklehead who goes, I'll figure out how to do it myself. And it takes 5 years and I spend twice as much money on tools and stuff like that.
Yeah.
Which is, to get to the InsurTech stuff, like I went and took this like Python and machine learning class a couple of years ago and spent every Saturday morning for a year doing it. I'm still bad at it. But if you think about what is the role of an independent broker for their client, it's not to be an expert on everything. It's to know who the experts are, to bring them in and sort of curate that panel of professionals. And particularly for things like where we have private equity relationships, or family office relationships, right? Where you can't be if you as a retail broker want to have a niche, like pick what the niche is, franchises, something like that, right?
Absolutely.
If you think about what we do with private equity firms, most private equity firms will have some sort of industry profile of, hey, we like the following types of businesses. Like,
here's our thesis. This fits our thesis. This businesses fit our thesis, and this is what we'll focus on.
Some are very narrow, but some are fairly broad.
Yeah.
And so like you can't, the thing I wrestled with until we got to where we are today, and I still wrestle with it, is if I show up, and this was my pitch 5 years ago at Symphony when I was just dedicated to private equity for about 4 months until I realized I liked doing search. I'd show up at private equity firms and I'd say, hey, here's how we fit together. My team understands transactions, but also within our brokerage firm, we have experts across 10 different industry verticals. And so we bring in those experts based on the deal that you guys are doing.
Yep.
There's a whole host of reasons why that's hard to do at, Lockton, because you've got inter office charges, and if you're in one region's P&L and you want to work with a resource from a different region, there's a charge back, and you get people with conflicting personal interests, and people aren't incentivized. In a lot of cases, they're not incentivized to work on new business, which I think is asinine, but it's besides the point. So that's how we position it for private equity 5 years ago. We're transaction advisors. We have specialty resources in-house. And sometimes we'd say we had specialty resources not in-house. And it was really that. It took me a while to get comfortable with that message, but that's what's happened in practice is for me to be able to say, like, look, I'm not an expert on everything, but I got a guy who is.
What's interesting about that is, essentially what I'm hearing is, I'm hearing a couple things. It kind of connects a few dots here. The first is why it made more sense for you to do this on your own as opposed to doing this at a big company. It sounds, what I'm hearing is you care more about getting the best result from the client than you do maximizing the amount of money that you're going to make. And I'm not saying that all the brokers are just trying to maximize the amount of money that they're trying to make, but for you, this gives you more control to be able to do that.
It's accurate. Yep.
And then the second thing, and this is probably a great place to bring this episode to a close, is, we talked about this offline, and throughout this, you said the whole time you've used the word broker and you have not used the word agent. And we had this conversation beforehand, and I think there's a great place to bring this up as we come to a wrap, is why do you say broker and not agent?
When I learned 22 years ago or whatever it was, when I went to work at Aon, which I knew as a broker, and we took the broker licensing exam, and I had to sit in a class. I don't know if people still do this. They like Aon would have classes 2 nights a week.
I've taken class and I've taken self-study.
Okay.
When I did self-study, it took like 10 times longer.
Really?
Well, because I wasn't doing it full time. I was just doing it, nights and weekends. While I was this time I was full blown InsurTech, so didn't have a lot of time. But when I went to the class, it was week-long class, take your exam, you're done.
Totally.
And I would take that 10 times out of 10 between the two.
I totally get that. That's why I did that machine learning class a couple of years ago. The thing I found is that the broker licensing exams, like I took my life exam on Monday night. I do not buy life insurance for me. I was just all I have a license for it, but I have a specialist I work with. A guy named Michael Westerfield. I'm going to give everybody his name at the Insurance Partners, now called TIP, and his team's awesome. And besides the fact that I want to extricate myself from like the HIPAA exposure.
Yeah.
So my point is, it just happens they have a very low bar for passing. But to answer your question, why a broker and not an agent? Because the first thing I learned was that the agency relationship and what is an agent, and this I don't know if this is still in the test, but
it is. I took as of 2019, the difference between a broker and an agent, like the actual definition of a broker and an agent.
And an agent is a representative of the insurance company, and that is so to me that was like coming out of the gate. What's the difference between a broker and agent? Agent represents the insurance company. In New York, a broker represents their client. And what I found is it sounds semantic. Some of it's geographic. There's an episode of Bradley Flowers' podcast where he talks about it too, and people in the South prefer agent. The distinction to me is that we represent our clients, not the insurance companies. And depending on who your client is, not that they antagonize us as brokers or agents, either way, but your client needs to know that you work for them. And if anybody's ever had a claim here's a great example. I've had peripherally, a lot of my friends are attorneys and they get involved in claims and stuff like that. Mm-hmm. And they've said to me, well, hey, there's this big claim. And I know that the guy over at XYZ broker, I don't think that they want to make, I could say the name of the insurer because it doesn't matter, but it was CNA. It's a specific example I'm thinking of. They don't want CNA to pay this claim because they don't want to blow their loss ratios for their profit share.
Yeah.
Well, how can you argue with the appearance of impropriety in terms of who the fiduciary duty is owed to?
Well, yeah, because you're not even saying CNA's at fault here. It's the broker doesn't want to do that because they don't want to, like, this has probability of loss. You're going to screw up the contingency, might knock you down, might knock you out. And at the end of the day, here's a question. What do you think about the fee only model that people
I love it. I absolutely, if there was a way to do it and make money on it, and I think about it all the time. I think about it all the time because there's a lot of small clients that would pay me a lot more than they are.
Mm-hmm. Yeah, sure. Right? It makes sense.
And I think everybody kind of intrinsically knows this. Most brokers, and I've done diligence on other brokers in my past life, right? So I've looked at, and I say brokers meaning independent agents.
Yeah. But
like everybody kind of has a similar distribution, unless you're very, very niche and everybody's the same profile. But most people have, some large clients. It's mostly small clients and a couple of big ones.
Right.
That is where you make all your money. I'd love to go to a fee model, but you'd wind up charging most of the clients more money. And I just don't know how you do it. And I know there's a handful of people doing it. Have they been on your show?
No, but literally as we were talking, I was legitimately thinking, it's like, that's probably a good guest to come on.
There's some guys in Ohio, right?
Oh, I'm sure there are. One. I mean, if you think about this in the RAA side of the business, the advisor side, and this was the model out of pure coincidence, the guy who kind of founded that fee-only model on the advisory side is, he's passed, but he's started in, actually, I don't know that he's passed, but I think he passed, started this in Columbus, Ohio, years and years ago. And then he grew that over the years. And then, it was probably when all the fee compression and stuff started to happen, when that model really started to grow. And then people started leaving the wirehouses and starting their own RAA practices and to go fee only. And I always loved that model. I thought it was such an interesting, it's a hard one to explain, but I think I am going to try to get somebody on and talk about it.
There's definitely an independent, and like I know some people like in the Twitterverse who are becoming consultants and working on a fee as a consultant, and it's tied to what value they can extract from the brokerage. And I have mixed feelings about that. The other issue too, and this is just explore this, is like state regulations around rebating and fee agreements. And I still don't, like, I've got a handful of clients on fees. Like, don't get me wrong. It's not that I'm opposed to it or don't do it at all. I look at, there used to be the RIMS survey, I think, of like what large organizations pay their insurance brokers.
Yeah.
And it's usually like 8 to 10% total cost of risk. So if your organization spends $3 million on insurance, including retained loss costs, everything else, then you should be paying your broker about $300,000, maybe $250,000, something like that. And that's usually what I kind of peg it to for bigger clients. No one has explained to me how you run into this issue of most carriers, if you want to go net rather than gross and net out the commission, a lot of underwriters are looking at gross written premium. And so they'd rather hit the GWP number, I guess, than net it out. So you don't get dollar to dollar savings and legally you can't rebate your commission. So I'm just not sure mechanically how you get to a fee model.
I don't know. It's
Yeah.
worth. I'm actually excited. If anybody that's listening is either doing this model or knows somebody that's doing this model, please send them over. I would love to have that conversation.
Yeah, I'd love to hear it.
Well, Andy, this is great. Congrats on all the success that you've had so far. 1 year in, I'm very excited to recap in a year and see where things are going.
Thank you for having me. I appreciate it. Here's my shameless plug.
Mm-hmm.
I want to grow right now. I mean, we're basically a 10-person shop, but there's 2 of us who are primarily doing production. I think we're getting to a point where our infrastructure is where we can support outside producers.
Yeah.
And I'm interested in seeing, I think there's a whole bunch of them out there of folks who are maybe 10 years in the business. Their agency was acquired and now they're part of a roll up and they want to try something else.
Yeah.
And if anybody listening hears that and thinks that I would be fun to work with,
Sign 'em up.
exactly. Give us a ring.
Sign him up. Andy, thanks for coming on.
Thank
This
you
was
very
great.
much. Thank you.